How's it going, guys? Welcome back to another Spectre teaching. In today's video, I'm going to be going over ICT's 2022 model and why I personally believe this is the best model that he has ever released. So, to get started, we're going to be going over the reasons why it does not work for people, right? So, the main reason that the 2022 model does not work for you is because you are not using it with context or a bias. So, many people think the 2022 model is simply just any sweep on liquidity and then a displacement. This is totally incorrect, right? You need to use the model with a bias, otherwise, it is very low probability. Now, the second thing that really separates profitable and non-profitable traders from using the 2022 model is the lack of patience. You are not waiting for a clear market structure shift, therefore you are using the model incorrectly. Okay, so with that in mind, let's go and have a look at the criteria, right? So the first thing that we need is bias. Without a bias, any model is simply useless. So we need a clear bias and context to understand where the model should form and how it should form, right? So the second thing we need is a sweep of liquidity. So once you have a bias, you understand which side of the market should be manipulated. If we are looking to buy the market, we want to see sellers get manipulated and then for price to trade higher. Now, the third and final thing we need is displacement and a market structure shift. Okay, so now that we understand the criteria and we understand where most traders go wrong and we understand the reason why they are unprofitable, let's go back onto the charts and I'm going to show you a chart example of the 2022 model. Okay, so here we are on the charts, and for this example, I'm going to be showing you a swing trade example. Now, the reason why I'm showing you a swing trade example is to show you guys that this model is applicable on all time frames as price is fractal, right? So in the 2022 mentorship, ICT did primarily teach this as a sort of scalping entry model using the lower time frames on indices such as the 1 minute and the 3 minute chart. But just to show you how price really is fractal and that you can use this on other time frames, we're going to be using the monthly, the weekly, and the daily chart. So let's begin. So first I'm going to mark out our range high to range low to understand our dealing range, and this will help us with our bias and narrative, right? So as you can see, price traded higher, running this buy side liquidity, and then we traded lower, creating our dealing range. So as of now, price has traded higher back into the premium of the range, and we have this high, right? We have this old high in the premium of the dealing range that has just been run. So we have traded higher, running the high. If we now go down to the weekly time frame, this will become a lot more clearer. So now that we have a bit more context on the weekly chart, we can see that we have ran buy side liquidity and we have also tapped into this bearish order block. Okay, so you can see that we are starting to form a bit of a consolidation here. Now on a lower time frame, this will be a very clear accumulation. So automatically I'm beginning to think we are forming a market maker sell model, and this could be a smart money reversal on the lower time frame. So let's have a look at this on the daily chart. So looking at the daily chart, you can see this is our 2022 model, which has now presented, right? We had a run on buy side liquidity and we had a trade through an intermediate term low with displacement. And if you play out the next candle, we have also created a fair value gap. Now, this low is a very important low, right? Because it balanced this fair value gap and then traded higher. So once price then reverses and trades through this low with displacement on a closing basis, I am immediately beginning to think that price is going to draw lower towards these lows down here, right? Towards the end of the dealing range inside of this market maker sell model. As you can see, this is our original consolidation. And then we also have a accumulation here. So now I have a lot of context, right? I understand that price should go lower because we're in the premium of a dealing range and we have formed a market maker sell model. Now, in terms of targets, if we look back on the monthly chart, what we can see is I have this fair value gap resting in the discount of the range. So we are going from a premium to a discount. And please do bear in mind, this is a swing trade, so this may take a while to play out. So this is our draw on liquidity being the monthly fair value gap. And we've had our 2022 model present. So we can look for our entry on this breaker overlapping with the fair value gap, stop loss above the high, and we can simply target this low for a nice 2R. So if we play this out, you can see we get tagged in. We chop around at the entry for a while, and then We trade lower, hitting full take profit for 2R. Okay, so just to clarify quickly, we had the context and we had the bias, right? We then had a run on liquidity and a displacement lower, creating a market structure shift with a confirmed fair value gap in the market. Price then returns to the fair value gap, overlapping with the breaker block, and then we trade lower. So you can see our criteria was met, and this model was extremely powerful since we combined it with a bias being lower and context being the market maker sell model. So I hope this does help you guys. If there are any questions, feel free to ask. And you can do so by contacting us, whether that's on Twitter, Instagram, or down below in the YouTube comments. And as always, thank you guys for watching, and I will catch you in the next video.